right, so Susanna, everyone here in the room, the first thing we have to cover, obviously trading is risky, and I want to make sure before I begin everyone is clear on the trading risks. So let me just hop on here to the DayTradeToWin website, and you can look here at the bottom. There is a disclaimer, and usually what I do is if you go over to the FAQ, I try to give, especially the beginners, as much information about trading as possible, the basics, the trading guides, how to synchronize your charts, rollover, um, profit target stops, experience. But remember, there is risk when it comes to trading. So obviously, I want to make sure everyone is clear on not trading with funds you can't afford to lose. Please contact your broker, how to open up an account, and the risks involved with losing. You can make a lot of money, obviously, in day trading, but you can also lose a lot of money. So we want to make sure we cover both the good and the bad. You can't go into this thinking that it's an instant means to riches, and I hope that everyone is clear on that. If you have any questions with the risks of trading, please contact me, and I'm happy to give you further information on it. And when it comes to trading on margin, something I also want to make sure you're clear on. Margin is not the best way to trade. So if you are planning on trading the E-mini S&P, I would definitely suggest that you have more than just $500 or $1,000 in your account, and we just have to be careful as well, okay? Now, the DayTradeToWin website has been updated. A few things before I get into the training. And I've added also a new page here called Simulator. And if you're interested in learning a little bit about day trading and getting set up with a paper trading account where you can place orders as well as understand the methods that are taught, you don't have to rush to open up a brokerage account. I think it's more important to practice, ask questions, email me your charts, and try to understand everything you can before, right, before making those mistakes and trading live. So there's a no-cost simulator. The one that I like to use is NinjaTrader with live data. Will help you get set up, and you can fill out here your name and email, and we'll help you get set up with it. The blog always has the latest information, rollover, next mentorship dates, as well as latest videos and holiday schedules and things like that. So you can definitely check out the DayTradeToWin blog for the latest information. Now you can check out all the courses that we have to offer as well right here. And I make the website as interactive as possible. Hundreds and hundreds of videos, testimonials, courses, and as well here the Trustpilot ratings from students. When we look at the E-mini chart, we look at price action. I really like to, before I get into the at the open method and Atlas line, all that system trading that I like to teach, we have to realize that these candles that you see here moving up and down, you may look at them and you may think that they are random, but they are not random. If you understand why they're moving up or down and then formulate a plan to go long or go short without optimization, and optimization really hurts traders because we've had with the last, let's say, month or two, very slow activity. And so if you optimize whatever you do based on the slow activity, when the market does change and becomes either a little bit more active or higher volatility, very active, it throws everything off. And so you can't really trade in thinking this is always going to be my settings, whether it be moving average crossovers or MACDs or Keltner channels or Bollinger Bands. We have to adapt as traders, whether it's a day trading or position trading, we have to adapt to what we see on the chart at the moment, hence the current conditions. So whether the market is slow or whether the market is fast or whether the market is too volatile, this always has to come first. And then we take it to the next step. Why am I going long? Why am I going short? What is the reason to stay out of the trade? What is the reason to take the trade? So when I look at the market as a general whole, the first thing that I want to do is I want to look at, as I go forward in time, can I expect the market to do what? What can I expect the market to do? So if I add, for example, the at the open, so this is NinjaTrader 8 that I'm using, and if I come down here to the list of indicators that I offer, the at the open 2 here is one of the methods which is completely taught. It's not black box, which you have no idea why you're going long or going short. So if I add the at the open here to my chart, I'm going to explain to you a little bit on the behind the scenes of what it's trying to accomplish, because it's very important not to just to follow software, but to have a clear understanding, why am I going long or short? As soon as the market opens, whether it be the E-mini, the euro, a stock, coffee, cocoa, soybeans, whatever the market that you like to trade, as soon as that session opens, expect the market to begin to increase in volatility. Typically, as the market begins trading, there's a battle. Buyers and sellers start to position themselves. Sometimes the buyers overtake the sellers and vice versa, the sellers overtake the buyers. Sometimes something happened overnight, and overnight the market begins, maybe it's because of Europe, maybe because it's a natural disaster of some sort. And so based off of the market starting to trade for the session, the beginning, the open, let's say the pit session as it used to be called, we typically have a move. That's what I'm trying to take advantage of, that initial move, that initial direction. Believe it or not, you can expect a trade every day on the at the open, but you have instances where it doesn't. And that's a good thing, because we just don't want to jump in long or short. We want to actually understand that there's a move and it's continuing. So if the market begins to push either up or down, and I'll show you some examples of that, I want to have an opportunity to buy it or to sell it. The software does it for you. The course, the At the Open course, will explain exactly how it works. It works on every market. A couple of things we have to remember though. If the market is too slow to trade, it's not worth it. And so if you have here, I use the ATR, the average true range, to help me with understanding volatility and what to expect. If you have the market on a 5-minute chart plotting less than 1 point, which means the last 4 candles are unable to make a move of at least 1 point, it's not worth trading. If you have the market very volatile, 4.5, 5 points, this is also an extreme. You should not be trading at these extreme levels. So too slow, not worth trading, a lot of chop. Too volatile, too much risk. We have to curb our risk as well. So here the market is just above 1 point. It's definitely slow. I would say it's very slow based off the market just starting. In this market, the E-mini. So if I was to expect a target, I would not say to you 3 points, 4 points, 5 points. I would say to you currently, really the only thing you could expect as we move forward in time is 1 point up or 1 point down. That's really all you can expect. You can't expect a big move, not based off of these current conditions. And so when I speak about being adaptive, the higher the ATR, it tells me I could take 2 points, 3 points, and it's just 1 times the ATR. So this is 1 point, which is the equivalent of 4 ticks. Now we've had some volatility the last couple of days, and so if I look at, for example, let me just go back here in time, and I see, for example, this happens to be yesterday, and I see here this ATO long at 23.97 which is what the software plots. What can I expect out of this trade? So this is really the only information that I have on the chart. This is it. I don't have anything to do with the future. I'm clueless about how the market's going to react, but I can tell you one thing with certainty is that this is almost certain to be achieved. So maybe the market will go 10 points up from this long, and you can trail a stop or trail a target. It's possible, but in reality, 1.25 points or 5 ticks is the only option that I can say for certain I can achieve. And after it makes the 5 ticks, if you decide to take more or trail a stop, it's different, right? So now we're looking at something different here. But you can't guess. You have to say, this is what I can expect to achieve. So this ATO long yesterday on May 23rd definitely made a point and a quarter. So I don't want you to think that every trade and every stop and every target is the same. It's not. You have to be able to adapt to the current conditions, and I use the ATR for that reason. Now we get into the signals. Where do I go long? At what specific price? You know, I see a lot of trading that is from the hip. For example, now's the time to go long, you hear in chat rooms. But why? Why are you going long? Do you understand why? At what price? What about slippage? Should I use a limit order? Should I use a stop order? What's my stop in addition? So when I develop these methods and I teach traders, I really try to be as objective as possible. Target, exact entry, exact stop. Why am I entering? Are there any other reasons not to enter? For example, today you have news at 10 o'clock and you have FOMC later in the afternoon. In reality, you should have a lot of chop. Now, this is something you can expect on any day that has an afternoon news event. If you have an afternoon news event, a lot of traders are on the sidelines. They say, why am I going to jump in long or short knowing that there's some type of news that's about to be released later on, later in the afternoon? So I would have to say to you, expect more of a whipsaw leading up to the news event because no one's really sure what they want to do. And then after the news is released, you'll see a big swing. It doesn't take away long, short, these rules, what's my target, what's my stop. It doesn't take away from that. But because there's an afternoon news event, you can expect the market to be a little bit more choppier than normal. It's normal to see that. So this is yesterday. And so like I said, if the ATR here is about a point and a quarter, even if you want to be more conservative and say, I'm going to take just 4 ticks, you're doing that based off of a reason. The reason being the current conditions at the time this trade occurred. So from here to here, the market made 2 points. I would say to you, it was the right thing to do just to take the 4 or 5 ticks instead of guessing. In addition, if I look at the day prior, so let's go to the day prior here. Right over here. So if I look at this here, you see two signals on the At the Open 2 software. You have the original, which is right here, and you have the trade chaser, which is right here. The way this works is whichever happens first, you take. So I know that I want to go long, so this is not an issue. The direction is known 100% of the time. I want to go long or I want to go short. The next step is, at what price do I want to go long or I want to go short? This is the price, exact price you want to go long, and this is the exact price you want to go short. And by the way, this begins to plot right away. Right here, you already know at what price you want to go long or want to go short. So as we start moving here in time, I have a stop order or stop with limit to go long, and I have a regular limit order right there, and then this happens. So when this happens here, you have to cancel this. You're not entering twice, you're entering once. It's long, whatever happens first. And now, based on the current conditions, let me just go back here, the market is less than 1 point. Now, this is in the afternoon, which I really do not advise trading the at the open method in the afternoon. But just for examples purposes, and by the way, it's less than a point on top of that, you're right. So this is only 3 ticks. If you go long, you have to say, well, the market's going to be choppy, it's slower than normal. I know that because it's less than a point. So it's, I think, a little bit more of a risk to trade under these slower conditions. And I also know this is the afternoon. The at the open method is really supposed to be traded within the first 2.5 hours of the session open. So noon for me, living in the New York time frame, Eastern Standard Time, Eastern Daylight Savings Time. Now, um, I want to be done by the first 2.5 hours. So this is after. The software will still give you the signals in the afternoon. It still will do it. So if I was going to take this trade, the only thing I can expect out of this, in reality, 3 ticks. So from here to here, the market made a 1.5. So the 3 ticks that I assumed was going to occur happened. So you can't say, I always want 1 point or 2 points or 5 points on each trade. You have to adapt to the current conditions. The same thing if I go back to the previous day. The previous day would be, 1 second here, right here. So this here is a trade chaser, which in essence tells me go long or go long here. That means whichever long happens first, you take. This is where it got you filled. Now, where you get filled is determined on the target and the stop. Therefore, now we're a little bit more volatile, a little bit more active, more normal. 7 ticks. 7 tick target is what I can expect. I can't expect, again, 5 points or 20 ticks for the market to continue. Based off what I see, this is it, 7 ticks. Trailing a stop afterwards is fine, but nothing more, nothing less. So what happened here? The market went from this stop or stopward limit, 3.5 points. Remember, I only wanted, based on the current conditions, 7 ticks. Right, this is NinjaTrader 8, correct. Correct. And now, but by the way, you don't need NinjaTrader to trade this because this is price action. You can use any charting platform, whether it be Genesis, Navigator, TradeStation. The software is coded for NinjaTrader 8 though. And if you need a simulated version with live data of NinjaTrader 8, just send me an email. Like I showed you there, you can get the free simulator to actually place these signals on a chart and watch them. Now, this was the 19th. Let's go to the day prior to the 18th. Okay, 18th here is another long. This is Trade Chaser right here. And now this is indicating long. You have to cancel this order. What can I expect out of the market? Let's take a look. So what I can expect is 3.25 points. Wow, that's a lot. So 3.25 points is definitely more volatile than what we have today. So it's adapting to the current conditions. This is what I can expect the market to make. I have my stops. So 3.25 points from here to here looks like this here. Right? So we don't know the future. Right, Suzanne? We don't know the future. All I can say is the market gave me a long. This is within the first 2.5 hours. That's the rule. As the market opens, it's pushing higher. I'm going long at this specific price. I'm long. 3.25 points later, if I'm not, or I should say, in the future, if this market does not move in my favor, I have to protect myself. I like stops. Obviously, we should use our stops. We shouldn't trade without being protected. I like to use a combination of stops, whether it be time, a catastrophic, proof, pivotal. These are all explained in the course. But if this trade does not make the 3.25 points, which is based off of the current conditions, I'm not going to hold on to this for an hour. Typically, I'd like to say maximum of 4 bars after you enter. So 3.25 points was hit on the very next candle. And it surpassed it. So it's not as if it touched your target and bounced off of it and you were left out in the cold. It actually happened. So if this didn't happen, if this did not make your target, One, two, three, four, you're out of the trade. Like I said, the rule is, this is what I teach, limit the amount of time that you're exposed in the market. You still would have been able to achieve a break-even trade, let's say, or a tick winner. In this case, it says 2 ticks, but let's just say it was a tick or a break-even trade. You didn't lose any money, and that's important. So limiting the amount of risk that you are subjecting yourself with when you enter into the trade based off of time, based off of proof, is very important. So I never hold on to trades for more than typically. So that's not with roadmap and X5, things like that I teach. But typically with the ATO, the rule is 4 candles. If it happens, great. If it doesn't happen, cut it loose. We're going on to the next trade. And we're never shooting from the hip. That's very important. There's always a rule and a objective way to look at this. All right, so this is the 18th. Let's go back another day and see if we can find maybe 4 or 5 days in a row. I think I mentioned 4 days in a row. Let's take a look. If this is the 5th here. Okay, so this here is based off of a sell. So this is not a long, this is a sell. If I go short here at 23.76 quarter, again, what can I expect out of the market? Market's volatile. Volatile than we've seen it in a while, 3.25 points. So 3.25 points happens to be here. Time-based stop. Do I have a catastrophic stop? You're out of the trade here with your 3.25 points. Questions on that? So that's, I think, 5 days in a row. Okay, now, in addition, let's think about trade management because this is always overlooked whenever I see traders contact me and we start talking and I ask them, how are you doing with your trading? And, how can I help you be a better trader? They almost never mention trade management. So let me offer you a way to manage a trade where you're actually protecting yourself if the market slows down. In this example, the only thing that I have